Welcome back, internet friends. Gold and silver have had a tremendous summer, breaking new all-time highs, and now we are seeing some volatility in precious metals. So today I would like to tell you guys what I think we're going to see going forward and what I believe is going on in the precious metals markets right now. As usual, this is not financial advice. Please take this as entertainment only. This is just what I do with my money. All financial investments come with the potential for loss. Before we delve into precious metals, I'd like to talk a little bit about the Magician. The Magician is a tarot card, and he has a message for us that we can take to heart right now. He's pointing up with one hand, pointing down with the other, telling us that what goes up must come down. As above, so below. Now the Magician has control over the four suits. He's a master of technology. He wears the red robe of courage, and he has infinite wisdom above his head. He is the conjurer of great ideas, and he is very in touch with the natural world. As we can see, he's surrounded by flowers. Whenever the price of any asset goes up too much, too fast, it's necessary for a natural price correction to happen. When you look at a chart, you can look at the EMA indicators, the moving averages, and it'll give you several lines based on different time periods. And any time that the price of an asset goes way beyond the moving average, eventually it has to crash back down and get closer to those average lines. Same goes for whenever something crashes and goes way below the average, it's going to eventually have to spring back and touch those lines. Those lines will get dragged up and down with the price action. But generally, if you see the prices way over the moving averages, then maybe it's time to be patient before jumping all into an asset. Wait for an opportunity when the price goes below the moving averages. You can generally tell that we're in a bull market when the price is consistently above the averages for long periods of time. Same with bear markets. If the price is consistently below the average lines, it's likely we're in a bear market. So speaking of bear and bull markets, is this the top? Did we reach the top of the bull market going over $2,100 in gold and silver over $29? Well, I don't believe so, and I'm going to explain why. If it was the top, this would be a very historically short bull market. The last secular bull market we experienced started in the very late 1990s and it ended in spring of 2011. It was an 11-year bull market. Prices gained over 500% in gold from the start of the market, which was about $400, all the way until 2011. We topped out at over $1,800. So this bull run has only been going on since about 2016. We're about 4 years into this bull run. Rick Rule in an interview just said that if this were a baseball game, we'd be in the third or fourth inning. And this is a game that's going to have extra innings. So you can use that as your perspective for where we might be in this timeline. And I may be wrong, of course. Gold could crash back down to $1,200 in the next few months, but that is incredibly unlikely with what is going on in the world. So if history repeats itself or just rhymes with the past, we're looking at gold potentially going past $5,000, and this rally may not end until just after 2025. That would give us about a 9-year bull run. But these are unprecedented times. Right now, gold and silver are going up in all the currencies around the world, even though we've had a couple days of harsh price correction after a parabolic move beyond $2,000 gold. Gold is still acting as a safe haven for very many countries as their currencies are going through. My home country, where my family is from in Argentina, inflation is absolutely wild. They're devaluing their money extremely fast. They just came out with the world's first 100-year bond, the century bond.
Argentina was the first junk-rated country to sell a century bond, raising $2.75 billion at 7.9% yield in June of 2017. But not long after that, runaway inflation drove Argentina into the IMF's arms. In 2014, I received 13 Argentine peso for $1 US. After the century bond was issued, we see you would now get at least 75 Argentine peso for $1 US.
and their government is actually giving something like 45,000 pesos to each working age citizen, commanding them to stay at home. And they have totalitarian rule right now. You're only allowed to leave your house for 1 hour a day. They're going through some really harsh times. No one's allowed to work, and they're printing money, just giving it out to the people. So those in Argentina who have gold and silver have really prospered. At least they've protected their hard-working money over these last 5 years since I've been there. Gold is acting as a hedge against inflation. Even here, the United States dollar has had a very difficult summer, while gold and silver have made historic gains and returned to levels we have not seen since 2012. So like I said, money printing is rampant across the globe. Printing money in the form of economic stimulus here in the United States, every single day more currency is created and pumped into the system. And we're looking at another stimulus coming up. So when that stimulus happens, trillions of dollars more will be created and borrowed into the future. We'll basically borrow money in the form of debt in order to bail out institutions like these airlines that are failing and pay people out to stay at home and have stimuluses and give loans for businesses. All this free money comes at a great cost to our futures and the futures of our children. Many people don't understand that. I know an old grandma who has a mansion and she's retired and she's been collecting the unemployment just because she qualified, and she loves her grandchildren, but she doesn't connect the dots that her taking that extra 10,000 of unemployment that she doesn't need is stealing from the future.
As the world was already indebted an amount of over 300% of GDP. Now the rescue programs of the governments represent another $10 trillion, which will be added to our debt load and will have to be in some way be repaid by future generations.
And there are many people older than me collecting unemployment, and people my age, but I know many. I'm the only kid not collecting unemployment that I know. Like, everyone is on unemployment. I'm door dashing, and there's a consequence to 1 out of every 3 working Americans taking money from the government right now. Not only are they becoming dependent on the system, but the government has to pay us, the states have to pay unemployment benefits, and the state of California I'm in is incredibly bankrupt. The state of New York we're seeing is incredibly bankrupt, as they just cut a ton of money from their waste management facilities. Now New York City, on top of all of its other problems I won't even go into, has trash that is not being picked up on the streets.
The new city budget slashes $106 million from the sanitation department's operating budget.
There will be a significant reduction in service, and these were just really difficult choices.
For starters, the litter baskets on many street corners will not be emptied as often.
And raccoons and rats are eating it and taking over. Scary times. With all the turmoil that's been caused by the COVID crisis, we see the potential for a global economic reset. And I may have mentioned this before in my gold and silver videos, but the World Economic Forum is actually talking about this as a wonderful opportunity to reset the world in a new economic model. So we don't know what that could be, but I personally don't want to have paper currency going into a new economic model. I would much rather have gold or silver that has hold the value for the test of time over 4,000 years. It's a useful, precious commodity. All fiat currencies eventually lose their value and go to zero. There's another potential fear that in the not too distant future, the United States could lose the world reserve currency status. And this is hard to believe for a lot of people, but it is possible. And if that were the case, that China or another nation was given the world reserve currency, it would cause massive inflation here in the US. Foreign countries all over the world have to hold dollar reserves so they can purchase oil, because currently, and for the last 50 years, the US dollar has been the world's reserve currency for oil trade. If the dollar does collapse or is no longer the world reserve currency, all of these countries around the world would be dumping their trillions of dollars and accumulating the new world reserve currency so that they can buy oil from various parts of the world like Saudi Arabia. I don't necessarily like to have cash in a cashless society where there's bank runs happening all over the world. You have a choice between, holding stocks, holding cash, holding crypto, holding precious metals. And at this time, I personally think precious metals are the safest because you hold it, you own it. Another thing to keep in mind is you can earn dollars, but you can't necessarily earn gold and silver. They're going to stimulate bank accounts with dollar bills. They're not going to stimulate with gold and silver. So if I can work for something and I'm going to be given something by the government, and many of my viewers and people in America are getting thousands of free dollars from the government just added to their bank account every Friday because of the economic stimulus, the unemployment insurance. They're going to give us free dollars all year long. And you can earn dollar bills. You can't earn, and they're not going to give you precious metals. So I think it's a great idea if you have extra funds to use these dips in gold and silver as a buying opportunity. Currently, precious metals only represent like 1 to 1.5% of all investments in the United States. According to Rick Rule,
I think the third thing that needs to be taken into account is the extraordinarily low market share that precious metals and precious metals related investments enjoy relative to other asset classes. But precious metals and precious metals related investments comprise between 1/3 and 1/2 of 1% of total investment and savings assets in the United States.
Wow.
The 3-decade mean is between 1.5% and 2%. So it doesn't take some dramatic gold bug environment like a gold standard or the collapse of the US economy or any of that stuff in order for this to work. The only thing that has to happen is that the market share has to revert to the 3-decade long mean between 1.5% and 2%. If that happens, demand for precious metals and precious metals related assets triples or quadruples in the largest savings and investment market in the world. Now,
imagine if we see a collapse in the stock market this fall. We may see a temporary correction in silver and gold as people sell off to make margin calls. But people will look for a safe haven investment, and there's no way gold is going to zero. So imagine all this investment money that is tied up in other things like stocks, bonds, and all of that looking for a safe haven. A large percent will flood into precious metals. Now, you can take multiple approaches with your precious metals investing, right? There are some of us who are end game investors, meaning we are going to hold most of our precious metals until the system completely changes or falls apart. And it's sad to think about that, but we are going to go through some crazy depression and economic turmoil going forward. So a lot of the precious metals stackers out there, you guys are holding for the long haul. But there may be a chance that there is a good time to sell. And Rick Rule mentioned in this hypothetical case when you might want to sell your precious metals.
Particularly younger people like you, where you are involved in your first rodeo with precious metals, is that there will come a time when you have to sell. And I've been thinking in response to many questions from many people, yourself included, what will be the signs? I would say that real interest rates, positive real interest rates in US dollars will be the first thing. When the interest yield on the US 10-year Treasury offers 200 or 250 basis point yields in excess of the consumer price index, which is a measurement of the depreciation of the dollar. Right now, the CPI is estimated to be at about 1.6%. I believe that's an underestimate.
Yeah.
But if you have a 50 basis point yield in the US 10-year Treasury, what it means is that the biggest competitor for gold in terms of safe haven savings assets costs you over 1% a year, compounded. Jim Grant calls that return-free risk. If you saw the yield on the US 10-year Treasury at 4.5%, with the underlying inflation rate down at 1.5 or 2, you would need to be concerned about the gold stocks because you would have disintermediation out of gold back into bonds. I don't see that happening anytime soon. The second thing that I think that you need to look at is market share. When you begin to see the asset class popular enough that it comprises, say, 3% of savings and investment products in the United States, then the easy money will have been made. It could be that the big money follows. In other words, it could be that there's a fad associated with gold. But the easy money is between 0.5% market share and 2% market share in terms of savings and investment assets in the United States. So in terms of when to sell, I think there are two quantitative gauges. The first would be real interest rates in the US 10-year Treasury. And the second would be market share of precious metals and precious metals related assets in the whole savings and investment matrix available in the United States.
If you guys enjoyed this video, please go ahead and smash the like button. Feel free to leave a comment, let me know what you think. Please subscribe, I make videos all the time. Good luck to you in whatever you choose to do, and just have a great day.